I have to say these medium-term settings, either of the Fibonacci sequence numbers or based on Tesla's genius, they seem to be a more effective MACD setting that can be used for day trading or trading cryptos, Forex, currencies, commodities, or stocks. Welcome. First, let's begin by giving a vote of thanks and our gratitude to the inventor of the MACD. And let's take a look at the default and see how we can improve on this default using two methods from two brilliant minds. Let's begin with Fibonacci. Now, of course, if we are going to tweak the MACD, we're going to have to use the Fibonacci sequence, which is 0, 1, 2, 3, 5, 8, 13, 21, 34, and so on. Now, trying to find MACD settings that work based on the Fibonacci sequence, which eventually gives us the 1.618 golden mean ratio, makes a lot of sense and is worth investigation. And I've been using these settings for a while, so I'm familiar with them, but I want to introduce them to you. So if we take the default here and take a look at our options, if we are looking for something closer to the default, then we're going to find that we're going to have to change the 12 to a 13, which is right there. And then the closest number to 26 is going to be 21. We're going to get 21. And then, of course, the closest number to 9 is 8. So we're going to put 8 right there, which again will give us something close to the default. Now, if you want to give some type of intermediate or a medium-term speed to improve the crossovers and signals, we can go to the next level. And this is simple. What we can do here is take the 13, put that in the middle, and then we're going to find that the next smallest number from 13 is, of course, 8. And the smaller number from 8 is 5. So we have 8, 13, and 5. That's going to give us a medium-term setting on the MACD. Now, if we're looking for something even quicker than that, we can use 8. Start with 8, make 8 the focal number, and then we're going to use 5 here, simple, because it's the next number down, and then 3 is the next number, and there you have it. We've taken the default MACD settings and we've adjusted to something close to the default, something a little bit in the middle, and then something quick. So we'll take a look at the charts and see how they relate. But before, let's take a look at the next setting options, which is to approach the MACD by way of Tesla's approach. So Tesla is famously quoted as saying, if you only knew the magnificence of 3, 6, and 9, then you would have a key to the universe. So we're going to have to use those three numbers, 3, 6, and 9. To keep it simple, we're just going to go with numbers that are divisible by 3. For example, 12 is good. We can put 12 right there. 26 can change to 27 as closest number. And then, of course, 9 is going to stay 9. So the default MACD settings with Tesla's approach of 369 gives us this as the default. Now, if we take 12 and make that the middle number, it's going to do something like this. This is going to be 9 and this is going to be 6, giving us our medium speed MACD setting. And then to get a quicker MACD setting, we can take this 9 and make that our focal point, and we get 6 here and a 3, which again brings us back to 369. Let's take a look at a chart example. Remember, the MACD should work for any trading instrument, and it mostly depends on how you use the MACD. But here we can see from a visual perspective, based on the black vertical line, we can see that the crossover here takes place almost identical in both settings for the default MACD settings. And also we can see right now that they are not crossing over and they almost look very similar. Also, we can see rejection here around the 0 line is identical information. So those settings, in my opinion, are pretty much interchangeable, which makes sense because all these numbers are very close to each other. Now, you can pause the video and take a look and see what you see in terms of similarities or differences, but for the most part, they're similar. Now, take note of this period where we had prices going down here, and I wanted to show this just to highlight something that I'll show later on. This line here are essentially identical. They show that they are essentially identical. We can say this to be a head on all of them, and then we got our left shoulder here and right shoulder. So an inverse head and shoulders formation. The point being they are identical. Again, take note of this period here where we have lower prices and again another low. But these MACDs went down and then up, down and then up, down and then up. Why do I say that? And why is that even important? Well, let me show you. If you go to the next setting, so we can say here, as prices made lower lows on a closing basis, we have eventually this positive divergence, positive divergence, positive divergence, but only one positive divergence. If you take a look at the medium-term MACD settings, visually, it's telling us as prices are going lower, the MACD is improving. And that in itself is the type of information we need to understand that there's a possibility of a strong bounce because of these back-to-back positive divergences on the MACD as compared to the default MACD settings here, which only gave us one positive divergence. So this medium-term setting, they were telling traders that there was a likelihood of a strong bounce based on the continued improvement of the MACD. And in fact, if you study that price action at the time, we'll notice that the first move down had very big periods or candles, and then they became somewhat smaller on the way down here. And then this last move to new lows here was very tiny moves to the downside. So if you compare that, the size of the down days here compared to this period, is saying that the sellers are getting exhausted and the buyers are building up momentum for what eventually turned into a positive reversal for a great entry. And from what I can see here, the medium MACD settings, either the Fibonacci settings of 8, 13, 5 or the Tesla settings of 9, 12, 6, they were telling us correctly that we were improving in terms of how much loss was taking place. The losses were getting smaller and smaller, and this is captured perfectly here by these settings. We got two positive divergences back to back as prices made lower lows, and for the other higher setting MACDs, we only got one positive divergence. Now notice something else. Now we have the RSI here, and notice how right there is a double top rejection at RSI 50. Now take note, because you'll see that that corresponds with this desirable period where you can go short in theory if you caught that move right there. And of course, eventually we have prices moving lower. So a desirable entry on the way down right here, which is this period here, late December 2021, right there. So I've drawn a line representing this area so we can study this quickly on these settings, which is this area in December. Now, while the RSI stalled at 50, as we just noted there with the double top, notice that the default MACD settings don't get back to the zero line here, robbing us of some valuable information. Oh, and by the way, do you use trend lines when you use the MACD? Because we can see a perfect example of a backtest failure right there. Of course, connecting this low and this low here. We can connect this low here on the other settings, or even this low here on the other settings, and draw trend lines. This is just another way of utilizing the information from the MACD, and both of them give us rejection areas which are sell signals. If you are trading and you observe that rejection, you know that prices are more than likely to be going down. And again, it emphasizes that the default settings that we are using here are pretty much identical. Now let's bring the medium settings. And as we saw here, we never got to zero. We never got to zero here. But now, aligning with RSI 50, we can see they perfectly touched the zero line and reversed, touched the zero line and reversed. And as I've always said for many years, whenever you see RSI 50 rejection, it tends to give you valuable information, because after touching zero here, prices went down, as we can see. And just like magic, if we take the lows here of the MACD, these lows here, or even these lows here and these lows, draw our trend line. In both cases, we have symmetrical movement above the blue line, back above it, symmetrical movement above the blue line, back above it. That is indication of an impending reversal lower, Over the years, I've made almost hundreds of videos discussing that phenomena. By the way, if we take a look at the current MACD settings and where they are positioned, we can see that on the default, we get a different look, no impending crossover, but we can see here on the medium-term settings, it looks like we are getting signs of a potential crossover, which is giving us earlier signs than these settings here of a potential for a change in direction. In this case, it could signal that there's a possibility that prices could start drifting lower. I have to say, this medium-term settings, either of the Fibonacci sequence numbers or based on Tesla's genius, they seem to be a more effective MACD setting that can be used for day trading or trading cryptos, Forex, currencies, commodities, or stocks. And I would say they are worth looking into. For the quick settings, I'll save us some time. I do encourage you to check this out. Personally, I've been using the Fibonacci series sequence MACD settings for years and found them to be very reliable. In fact, on most of my charts for many years, I've used this Fibonacci default setting and also this quick one. I usually have two MACDs, but I think if you have to go with one of them, I would go with the medium MACD settings. From what we've seen here, they just seem to capture swing trade turning points a little bit faster if you know how to read the MACD. And so it is.